Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Mike Bellafiore on the line. He is co-founder of SMB Capital. Mike, how you doing this morning?
Great. Good to talk to you guys.
Well, you can run an interesting firm there. Could you just tell us about what you do there at SMB Capital and how you recruit traders and how you train them?
Yeah, so if anyone out there is a really particularly good trader who's looking for firm capital to back them, we're the place to reach out to. We fully back traders in options and in equities. We fully back automated strategies and also in futures. We trade different strategies, short-term mostly, but open to lots of different ways to attack the markets. We're in Midtown Manhattan, and looking forward to another opportunistic trading morning today.
Do you back remote traders, or do you require people to come to New York to trade for you guys?
We do have remote traders. We do have that capability. Most of our traders are in New York City, and the idea being that if you trade it for a long period of time, it's good to have that discussion back and forth of ideas. There's a lot to be gleaned from somebody else calling stuff out, and most traders like that. Not everyone, though. There are traders definitely who are more introverted, who would not do better in an environment where there's lots of traders sharing information, calling things out. But most people like to be in a good environment where people are sharing. And so we try and foster that type of environment.
Okay, let's move out to the S&P futures. And when we started our broadcast at the 8 o'clock hour, boy, things were quiet. The S&Ps were in a tight 4-point range, and kind of anticipating the last couple Thursdays, 3 or 4, we've had some pretty good news out of Japan and then China, European Union last week. And today, I think people are waiting for, the ECB to begin their wave of QE, and got a little pop and a little drop here. How much attention do you pay to the pre-market trading, after-hours trading in the S&Ps, and also in individual equities?
Yeah, so great question. So the ECB announced, coming across our wires, that the policymakers are going to wait until next quarter before assessing if additional stimulus will be needed. And the first initial reaction we're seeing from the marketplace is some weakening. So that's the first indications, as you're mentioning, are to the downside. And we'll sort of see if the market can shrug that off. We are, near market highs. I think the last time that you and I talked, we were hovering towards breaking the 200-day moving average. And we were sort of in the middle of an 11% drop during that October period, and we've regained almost all of that footing from that period of time. So we're noticing the softness, we're noticing the weakness. We're interested to see if it'll get shrugged off. We're cognizant of the fact that we're near highs, so if things may be priced to perfection in the short term, and so we may sell off a little bit in the pre-market, but we definitely need a little bit more information before we can consider whether or not we're going to head down 5% or more.
Okay. All right. You're talking about preparation, and for me, I'd like to see how the markets close. I wait till the S&Ps close at 6 p.m. to get that closing price, and I immediately do my numbers and my technicals based on that trading range, and that gives me setups. Actually it closes at 5:15, but reopens at 6, and has me prepared. How do you prepare for your trading day? I mean, does it begin with the close the previous day? Do you notice certain tendencies in stocks? You follow the close, the closing imbalances, the closing prints, and then you do your analysis at night, or do you wait till the morning? How do you prepare for the trading day?
So I think this is a huge topic. We could talk about this for hours, so I'll try and boil it down into a couple of minutes. But if you study the really great traders and investors across time, you will find something very surprising. Most people would think that the great traders and investors across time are people that have edge or profits, for lack of a better word, great predictors. And it turns out that if you study great traders and investors, that their edge, while that is important, is not the most important thing. The most important thing is the process that the trader goes through. All great traders, all great investors spend an enormous amount of energy on their process before and after markets, and a lot less time than people recognize on the actual trading day. And so I like to say you win the game before you play it. And so how good we're going to do today is based upon how we were prepared after the close yesterday and in the pre-market today. So after our close, we're going to review our trades. We have software that helps our guys crunch all their numbers, find out what they're doing well, find out what they're not doing well. We have a process and meetings where we're going to highlight ideas for tomorrow. Right after the close, there's going to be price action from yesterday that's going to be helpful for today, and we're going to highlight that. And then in the pre-market, we have tools like the SMB scanner, which helps us identify stocks that are going to be in play. We actually have a partnership with Benzinga where we take your news feed and we put some algorithms into it, and we populate stocks that are up and down the most that we look at trading. So that's how I start my day. I actually open up the SME scanner. I see what's up or down. So on a day like today, you can see, EXPR is something that's down a lot. Plug is something that's in play that's up a lot with a new contract. Taser has a little bit of a pop. AVGO, MBLY, ARO, gas. The airlines are strong because of oil dropping a little bit more. So we have this very quick snapshot of what we might want to trade, and then we dive deeper into those names. We'll look at what are the news. We'll think about our particular trade strategy. We'll create a roadmap for how we're going to attack the day.
Okay,
the other day.
Okay, yeah. Go ahead. Guys, sorry to interrupt you. Go ahead, Mike.
No, and the other day there is a really great example. I got short BBY. Very few people did, and it was kind of a soft, slow day. And I caught it on our scanner, and I had that stock in my queue, and I put a short position on, and it worked really well. I mean, you're only as good as the stocks you trade. And I think a lot of people miss that, but I didn't. And it was just because my preparation was better, not necessarily anything to do with my trading. It was just I was better prepared than other people.
I mean, you just said, we could talk about this for hours. I mean, with the things that you just said, I jotted down like 5 questions here. I know we don't have time to get them all in here, but the first thing is you said, the great traders and the great investors. I mean, of course, if you go to investors, you go to Warren Buffett. Give us a couple other. Who do you consider to be the great investors? And then also, give me the top 2 or 3 greatest traders in your opinion.
Yeah, so I mean, I think Paul Tudor Jones is one of the really great traders that you can see in our space. Stevie Cohen is one of the great traders that we have out there today. And, on the investment side, Paulson got a tremendous amount of ink for catching the downside in housing. But if you look at his results across 20 years, he was positive every other year save one before actually catching that huge down move. In the investment space, he's obviously huge. I mean, Bridgewater's chief is legendary these days. But there's there's a handful of them, and it shows how truly outstanding those people are that we probably could very quickly name 15 in the trading and investing space and be done in terms of legendary guys.
Okay, going back to you mentioned that you like to look at the Benzinga data, and I don't know if it's the stories or what's going across. Do you use that as a contrarian indicator, or is that something like if like everyone was so bullish, Best Buy that one day, you're like, okay, everybody's so bullish, it's going down. How do you look at it? Do you look at it as something that you like to aggregate the data and go with it, or do you look at it as a contrarian indicator?
I want to trade stocks that can finish high of day or finish low of day. That's my trading style, and that's a lot of what I teach our newer guys who come into our firm here. So, when I'm looking at an EXPR today, which is down a lot, I'm not that concerned about it being down so much on the open. I'm mostly concerned about, is it a news pattern that can finish low of day? And if it is, I'm going to be looking for a place to short that while controlling my risk reward, even if it's down a lot. Plug, is up a lot. Is that because they have a new contract? Is that going to be a news pattern that can finish high of day? Arrow, down a lot. Is that a news pattern that can finish low of day? Guess. That's how I'm looking at the markets.
Okay, so you're looking at it from the news, and then you take the news and you kind of put your technicals into it, and then you let your setups develop. Do you like to sit out, the first 5-10 minutes, or like 15 minutes? A lot of people look at the 15-minute opening range in stocks, and then make a move based on a breakout of the higher low from that range, or are you ready to? Ready to set your technicals and pounce on them, even if it comes up before that?
So I look at trades as patterns and plays. My second book is called the PlayBook. I look at everything as just a trading play as opposed to a prediction or a thesis about a particular stock. On the very open, my playbook consists of what I call an opening drive play. This is more of a scalp play. It's more of a momentum play. I do make some of those plays. They're harder to make with HFTs. I'm getting a little bit older, such that I actually prefer different types of setups than those sort of quick hit and misses. The other day I did catch an opening drive play where I noticed the stock was down. I wrote a blog post about this. The stock was down over 7% right on the open. There was only news about a JP Morgan downgrade. I did buy that, call it a quick 4%. So I will play the open, but since I'm talking to you, I'm happy to not necessarily play the first 10 minutes today. But most of my money, based on measurements and review of my trading, occurs after the open. So around 10:15, we say price discovery has ended. The first 45 minutes of the marketplace we call price discovery. Stocks move up and down, and we're not really sure necessarily if they're not trending yet in the first 45 minutes. They're just discovering which direction they want to go in. But after that, stocks will trend. I want to be in stocks that are trending, mostly. That's how I'm going to make most of my money.
And if we were like sitting in your desk right now, looking at your screen, I mean, do you have a bunch of different charts up with a bunch of different time frames? Or do you have, several stocks up with all in like a 5 or 10 or 15-minute time frame? How do you arrange your trading station, and what time frames do you look at for the equities?
So if we were to look right now, all of my time frames would be 1-minute charts.
Wow.
Because the first 45 minutes of the trading day is just price discovery. Things don't trend. At 10:15, you're going to see multiple time frames, and you're going to start to see me narrow down on the stocks that I think are most opportunistic for me.
And what time frame do you go to at 10:15? Do you go a little bit longer term?
I'll go 5 and 15 minutes after 10:15.
And you won't look at the 1 minutes anymore. Then you'll try and focus in for your.
No, I will.
You will.
I do look a little bit of. I'll use a 1 minute at that point more for entry and exit, and I'll look at 5s and 15s more for direction and I'll use the 5 minute if I'm not as confident in the trade. I'll use the 15 minute if I'm more confident in the trade to determine whether or not trend has broken or not.
And the dailies, I mean, is that something you look at the end of the day, or is it something you always, kind of have a daily up there in the left-hand corner to go to just to get a little bit of longer time frame on the issue?
Yeah, so I'm going to use the dailies for trades that I consider to be technical trades. So I'm going to use dailies for breakouts and breakdowns and high beta stocks. Part of our strategy is to trade high beta stocks. It's a smaller portion of what we do. We do trade them. We will trade the Netflixes and the Amazons and the Teslas and the GoPros, the Apples, the things that are expensive and that move a lot. For those types of trades, we're going to want to see breakouts and breakdowns on daily charts, and we're going to see a news catalyst behind those ideas for us to stay in them for hours and potentially swing trades.
Okay, question coming out of the chat here. What tactics do you use for tracking HFTs? And has an example here. He says Steven talked about the EA Advance was similar to the pattern of HTZ. Do you know what he's referring to there?
So we have changed the way that we teach our traders because of HFTs. When I first started SMB, we taught traders how to read the tape, trade momentum, look for stocks that were very volatile. We taught a lot of scalping. We taught a lot of momentum trading. And it was very effective in 2007 and 2008 when that type of active trading was rewarded. And we noticed, my partner Steve Spencer was pretty good about noticing the market had changed. And we needed to adapt. I mean, trading is not about knowing everything and never having to change. I mean, we're always trying to get better, and we're always adapting. And HFTs have forced us to adapt. No big deal. What we've done is certain plays don't work for us anymore because computers are so fast, they've taken away certain plays that we used to make money on. So we look for different types of setups. We use news catalysts more. We use technical analysis more than we did in the past. We hold things for longer periods of time. We've sidestepped the HFTs. I am not competing against HFTs. Trying to compete against HFTs, I'm not fast enough to do it. I don't know a lot of people who are. I would recommend you not trying to do that. But stock's going to go to where it's going to go, whether HFTs are in the markets or not. They may divert the course of it. They may change the way it gets to the price it's going to get to, but stock's still going to get to the same price. And we're just going to not play that game.
Okay, great points there. Adaptation, changing strategies in the markets. I think that's Dennis and I, something that we talk about a lot on the show, how, the time frames have changed, the way to trade is changed because of the HFTs. Before we let you go here, you did mention the stock Aeropostale. Are you inclined just to as much trade a $3 stock as you are a $15 or a $20 stock? And if so, I know they had some negative news on the issue today in Aeropostale. Could you just give us a quick analysis of that stock before we let you go?
Yeah, so I'm much more inclined to want to trade stocks between $30 and $60. And you're absolutely right. A stock that is under $5 is going to have to be a very special occasion for me to want to dive into that.
And then just getting over 60. I mean, I've noticed that a lot too. I mean, once you get to 70, 80, 90, obviously get to the $100 stocks there. It's much, the risk rewards are much harder to, to define and keep an eye on the risk. So is that the reason you like to stay in that sweet spot, 30 to $60?
I've noticed crunching my stats over long periods of time that those are the prices that I trade best. maybe that's just my quirky person. Maybe that's just me. We all have strengths. We all have weaknesses. You got to understand what your strengths and weaknesses are. When I see a stock in the $30 to $60 range, I know my stats are better, and I'm going to trade them bigger. When I see something $60 to $100, I'm pretty good in that time frame as well. But there are some prices where I'm not as good at, and I can tell you that under $10 stocks, I'm not that good at it unless they're special occasions based on my trading style. And it's okay. You got to know that. I think
Great.
you got to be crunching your numbers and understanding where you're making money.
Yeah, wow, great point there, and I think you learned, from this interview, if people can take away two important factors. One is preparation. Mike does plenty of preparation for himself, and not only his traders, and also knowing your strengths and your weaknesses. Knowing looking at your prior trading pattern, your prior history, what works for you and not works for you. It gives you're probably more confident when you're going into these stocks in that price range because you know of your track record. Well, we've had Mike Bellafiore on the line, and he runs a great firm called SMB Capital. He's been kind enough to take his time out from the open to discuss his trading strategies. Great stuff, Mike. We really appreciate it. Have a great trading day. We hope to talk to you again soon.
Okay, thanks a lot.
Okay.
Very well.